The stock market is on one today. What's going on, team? It's Ricky with TechFoot Solutions. Hope that you guys are all having an amazing start to the week. It is March 13th, one day before the CPI data report. What a time to be alive, right? CPI data report is tomorrow. Banks are failing. A lot of bank stocks are selling off even after. I'm sure a lot of you guys have already heard the news. SVB Bank, which is Silicon Valley Bank, that failed last week. It was the second largest bank failure since 2008. Back in 15 years, there has not been a bigger bank that has failed with over $200 billion in under management. They got bailed out, right? So they got bought out, I think, for £1 from a UK bank. Something like that, saying that businesses to resume back as usual. So supposedly they have nothing to worry about. The part that is really interesting is this is why I'm actually making this video. There's no question that inflation has been showing signs of it being sticky, right? Which is why the market has been selling off. There's a lot of uncertainty if the inflation report that's going to be released tomorrow, if it's actually going to come in lower than expected. I'll be making a video later today about what the market expectation is and how you can prepare for that. But the thing that I want to talk about is now what people are saying. You have institutions like Goldman Sachs. I'm not even sure if some of you guys saw this. Goldman Sachs announced that it is taking back its expectation for the Federal Reserve to raise rates even higher. Do you know what that means? They think that because of how bad the whole banking system is right now, and that's their fault, right? That's their fault. It's not our fault. We put our money in there. It's these banking institutions. It is their fault and why they are in that position, yet it is to be expected because of their fault that now the Federal Reserve shouldn't be raising interest rates as much as they would have because of how it can hurt these banking institutions. And of course, if these banks fail, then of course it hurts us. But the part that's just so mind-boggling, right, is everyone was pointing the finger and laughing at FTX because oh my God, this is why crypto can't be trusted. Well, what about these banking institutions that are so overly leveraged, right? It's it's not that just crypto can't be trusted. It's traditional banking institutions. The 16th largest bank in the United States failed, right? And the Federal Reserve is now just going to have to be okay, well, we don't want other banks to fail, right? Because then that can be a much larger collapse than we probably want, right? And at that point, they probably might not even raise any interest rates, is what the market is now putting into effect, which is why I think the market is reacting the way that it is. Things are so bad right now. I don't want to say they're so bad because I don't know, right? Things are so uncertain right now about what the Federal Reserve is going to do because of what's happening in the banking system that they are considering not even raising any interest, not having any interest rate hikes, because of how it could negatively affect banks. So I just don't understand what we're going to do then. How is the Federal Reserve supposed to moderate inflation if they can't raise interest rates, right? Now it's going to hurt our dollar, but we're doing that because banks couldn't do their job in being fair financial institutions, right? They got very greedy during bull markets. They became overly leveraged, and now we're experiencing the repercussions of that. And sure, obviously we don't want the banks to fail, right? Because if the banks fail, then of course it hurts. At the end of it, it's these institutions fail and it sucks for them. Anyone can say well, F them, right? Well, no, because then if they get F'd, then so do we, right? It always just ends up falling back on us. I just think it's a full circle. With what happened at FTX, everyone's oh my God, I can't believe that happened. That's so unprofessional. And then this happens in the 16th largest institution, right? Banking institution. It's insane to me. So NASDAQ market showing signs of an uptrend. It's up 1.4%. We have TQQQ up 4% on the day. Congratulations, bulls. Market is bullish. We're trading above the moving average. We're trading above the EMA. It doesn't mean that the market has to react in a positive way, even if the inflation report does come in higher than expected. I just wanted you guys to have a little bit of a better understanding of why the market's pushing up. And it's a lot of these banking institutions are taking back their expectation of further interest rate hikes because of how the Federal Reserve thinks that it might actually do more harm than good to these banking institutions, and that's not something that they want to have to add to their plate of just issues. I guess that's really what it comes down to. So I'm still going to live stream that CPI data report. I'm just as confused as many of you guys, because we do not know what the Federal Reserve is going to do, and that's all I was ever basing my trades off of. Is if this economic data gets released, I then, understand that economic data, and then I just look at it through the eyes of the Federal Reserve. This is just another curveball that I do not know how to interpret just yet. So it just means that we have to stay patient, right? During uncertain times, right? When in doubt, pull out. Stay cash. Do not put yourself in a position that you're going to end up regretting. So it doesn't mean that the market has to rally. It doesn't mean that the market has to sell off. CPI data report still going to be released tomorrow. I'm going to live stream it. It is going to be very early, especially for my people out here in the West Coast. The CPI data report gets released 1 hour before the market opens. And like you saw today, we have gone through daylight savings, which means it's now even 1 hour earlier. That means that I have to live stream at 5:30 a.m. So again, if it's not too much to ask, I'd be more than happy to host that live stream for all of you guys. Get this video to over 2,000 likes. And again, let's host that free CPI data report live stream and see how the market reacts to the inflation rate. So I hope that earned your thumbs up. In today's later video, I'm going to talk about the expectation for the CPI data report and previous CPI data reports and how the market reacted. But again, just wanted you to have a better understanding of what is being factored into the market right now. I would not enter a hopeful position because, again, towards the later half of the day, it would not surprise me if things begin to get factored in of what the expectation is for the Federal Reserve. Right now, we're going through the hype of what's happening with the banks. Later, again, we're going to come back to reality and factor in what's going to happen to that CPI data report. So if you begin to see a shift of direction, just a friendly reminder, have an exit plan. I want you to keep those profits in your pocket. And again, there's no such thing as a perfect trader or a perfect investor. Your job is not to be perfect. You will never be perfect. Your job is just to be good and be effective, right? So make sure you set effective exits whenever you see there to be a change of direction. Hope that earned a thumbs up. Please consider subscribing. Friendly reminder, again, I'll see you tomorrow for our CPI data report. And don't forget, I trade live with one team and one team only, and that's my Learn Plan Profit Group, and that's that second link in the description down below. And yes, that's 5,000 entries for the GTR giveaway if you sign up today. But again, second link down description down below. Appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.